Hello and welcome everyone to another weekly market commentary from StashAway. Of course, with us, our Chief Investment Officer, Freddy Lim. Freddy, how are things?
Hi, nice to see you, Philip, and also fellow audiences.
Yep, it's been a good week. So far, so good. We have new highs in the US markets. And we also have some good news from StashAway. And we're happy to announce that we are also now available for Hong Kong residents. So welcome everyone in Hong Kong. So if you've been listening to the show, you're now able to invest through our Hong Kong platform as well. Check out our website for more information. Reach out to us, ask us any questions in any of the next videos. Freddie and myself are always happy to answer them, as well as our customer experience team as well. Freddie, let's get started. There's lots of topics we do want to discuss, right? One of the big hot topics for the last 6 months, basically, it's really heating up, is SPACs, right? These vehicles that take companies nowadays public, which go without going through the full IPO process that everyone is used to. Can you explain that a little bit more for the audience?
Well, SPAC's been around even in the 90s and actually was quite infamous, but it's re-emerged again during the COVID-19 pandemic. As you know, pre the COVID situation, a lot of companies actually prefer to increasingly stay private. But then COVID changes a lot of things for a lot of startups and companies, and actually demand for raising funds in the public through SPACs has just gone up again. So what is it exactly? It's a special purpose acquisition company, basically a blank check company that doesn't yet has any activities or any operations, and yet has yet to merge or acquired another companies, or he hasn't had anything to do with anything yet. Which is the reason why its filing process is fast and easy. And normally the SPACs will, focus a lot on the background of its sponsors who will put in some money with it, and their reputation and track record of management track record and history behind the SPACs. And in some SPACs, they may even mention the mandate. Like, for example, this SPAC is going to be a global robotics fund. It's going to start acquiring companies in the field. So some may do that, some may not. The big reason for why SPACs are increasingly popular for companies to go raise funds from the public market is that it is fast relatively to the years of preparation for an IPO, and two, it also avoids the typical price setting uncertainty in the traditional IPO. In a traditional IPO, you got to work with an investment bank and who will estimate public demand and gauge where prices are, but it's really a guessing game. And that's why you see a lot of pops up and pops down on the day of the IPO. So there's a lot of volatility that comes with the usual price setting process in the traditional IPO that you entirely avoided, because now is merely the SPAC sponsor negotiating with acquired companies, targeted companies, what they are worth, right? So it really can be attractive from a certain angle for companies looking to raise money.
So with that sounds all super interesting, right? And obviously, interesting to me means interesting to probably a lot of people, right? So that means they have these public shell companies. So I can just go on to any brokerage platform and just buy the shell company and be part of that investment process? Or how does it work? And then also, that seems like kind of risky on a day-to-day basis, I would say, because if they only have one company and you set the fees and stuff, right? Like, how does it work, Freddie, on that side?
Well, normally before the IPO, the sponsors of the SPAC and the management team of the SPAC would have gone into their marketing rounds and probably gather some investor support, institutional investor support, who would get a preferential treatment, a more favorable price versus, like a discount, right, for coming in early. So as retail investors, we don't get the advantage. We sort of have to wait for the IPO to be done. We buy in the public markets. through your brokers, as long as it's listed in any exchange and your brokers had a connection there, that you will get it. So it's there's no preferential treatment, or you can say asymmetric treatment between institutional investors and retail investors. And number two, there are also big risks like that you got to know the sponsors well. It's heavily dependent on them. Their track record in managing projects and past companies, successes and failures is good to know them. The strength of the sponsor, and also because you're paying a significant fees to the sponsors. The sponsors, on average, tends to get 20% of the entire SPAC's fundraising round in shares on the SPAC. So they also get a huge discount in acquiring stakes in the SPACs itself as well. So you're giving a lot to the sponsors who has no downside. Are there any control mechanism, governance processes? Investors should find out more, right? And of course, be mindful of future dilution, because you're getting in now, and the SPACs tend to raise about 25% to 35% of what they really need eventually. They may actually raise again with assisting institutional investors through something called a PIPE. It's called a private investment in the public and equity transaction, PIPE. So meaning, even though they've gone public, they can issue additional shares to institutional investors because they needed to raise more. So there's a possibility that can happen, and there will be a dilution to the percentage of ownership you have acquired as a retail investor. So this is some of the most important aspects of SPAC. It's not an easy thing to do. I think for retail investors, really be mindful of the kind of risk that you are taking with a blank check company.
Yeah, lots of research to be done before you do invest with those. Thank you, Freddy, for that overview. I think it was super interesting, even for myself. I think that this whole SPAC is obviously, if you go on any kind of financial news website, they're all over the place. So especially with Grab being in talks of being acquired by a SPAC, is quite interesting and very timely. So thank you for that. So Freddy, in more day-to-day news, right? We saw unemployment rates dropping in Singapore for the fourth straight month, right? Where do you see this going? Is this a continuation going forward, or do you see any kind of bounce back coming through? Especially since it's not, Singapore has opened up to everyone in Singapore, but there's still no outside people really coming in through tourism and other things.
Well, Singapore's unemployment situation has continued to improve. The overall unemployment rate has dipped from 3.2% in January to 3% in February. I would say they are assisting in the assisting form. The programs such as the jobs growth incentive programs and the wage subsidy schemes in Singapore has actually helped a lot. But of course, the manpower minister Josephine Teo has warned that there's going to be a diminishing returns to jobs gains going forward. However, I beg to differ. I'm actually very bullish on Singapore in the sense that we have already eased social distancing rules and things were still fine. The vaccine drive are accelerating, and the reopening of the Singapore economy within itself is near completion. What's left is just a reopening of borders, right, with key partners. So we continue to expect further improvement in the second half of 2021, and actually do see Singapore's unemployment rate going back to exactly to pre-pandemic level by the middle of next year, perhaps.
Good. So that's for Singapore, kind of like an overview, right? When we look at more globally, and especially US markets, as I mentioned earlier in my call today, right? Hey, we're hitting new highs, all-time highs. People are obviously worried about starting to invest right now, right? Or like, hey, should I deploy more money into my investments with all-time highs hitting? We've touched on this before, but I think that's a timely lesson, I think, for investors. If you could share a little bit about, do you think there's more highs coming, or what's going on? Where should I put my money now?
There's a caveat to all this, because every time when the media start fanning like, whoa, the S&P set new high historically, every time they do that, we see the market retrace lower after that. But then after that happens, the market make another new high again. So it's really ultimately is really the long-term economic growth that comes in. The index is always going to make a new high because if every year our economy is growing, the stock market every year will have to reflect those earnings potential and also the dividend that it pays out, right? Vis-a-vis the inflation that erodes those earnings power. So it's really, as long as inflation is kept under control against growth, as long as we have growth, the index will, given enough time, make new high. The process of getting there is unclear. However, right, there's a lot of bumps and hurdles along the way. But ultimately, it will be the economy. It will be the vaccine drive. If I look at today, it will be the reopening of borders that hopefully will come, if not later part of this year, next year. And the other fundamental factors that will propel us sustainably further from here, right? So it's better to actually ignore whether you have a new high or you have a recent drawdown. It's better to just have a financial plan that focuses on investing your dollars on a consistent basis. For example, monthly. That focuses on you earning out savings and investing those savings and doing so every month, regardless of what happens. And to try to unleash the power of compounding with time. That would still be the most attractive thing to do. It just requires a lot more patience.
A lot of patience, but good lesson in there, and not chasing those highs or small pullbacks. Thank you, Freddy, for that. If you want to learn more about StashAway's economic regime asset allocation model, the way we invest, the way we think about investing, we have an upcoming webinar for both our Singapore as well as our Malaysian audience. That's on Wednesday, the 14th of April, 7 p.m., done by yours truly, Freddy. So if you want to learn more from him, Wednesday, 14th April, 7 p.m., the sign-up links for that are in the show notes below, as well as on our website, social accounts, etc. So you can find out wherever you can find us, you'll find those sign-up links. We hope to see you all there. Otherwise, Freddy and myself will be back next week and looking forward to connecting with all of you again. So until then, have a great rest of your week. Bye-bye.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.